What if the very thing you're doing to secure your retirement, your RRSP, is secretly costing you thousands? Today, we're exposing a hidden RRSP trap that most Canadians fall into, and I'll show you exactly how to fix it to save massively and truly retire richer. Trust me, you don't want to find out about this mistake when it's too late. You've been diligently contributing to your RRSP, perhaps even maxing it out, feeling proud that you're building a solid financial future. But what if those perfectly good intentions are actually setting you up for unexpected tax burdens down the road? Many Canadians unknowingly overlook crucial details about how their RRSP interacts with their future income and government benefits, turning what should be a powerful savings tool into a surprising drain on their wealth. These aren't minor oversights. These are significant blind spots that can erode your hard-earned savings and jeopardize your financial peace of mind. In this video, we'll peel back the layers on these costly errors. We'll clarify the often misunderstood RRSP versus TFSA debate, uncover critical withdrawal blunders, and reveal the shocking interaction between your RRSP and benefits like OAS and CPP. Most importantly, I'll equip you with a concrete strategy to fix these issues, transforming your retirement outlook. Stick around, because the next mistake is the one almost everyone makes without realizing it. Let's dive into the first critical error. It's not what you think. While the immediate tax deduction from RRSP contributions is appealing, the real trap lies in the tax implications when you eventually withdraw your funds. The mistake isn't contributing, it's failing to plan for the eventual tax burden on those withdrawals, which often hits at a much higher effective rate than anticipated. Imagine a Canadian who diligently saved $150,000 in their RRSP over decades. If they simply pull out large sums in retirement and their income then places them in, say, a 30% tax bracket, they could be losing $45,000 in taxes alone. But with strategic planning, that could be drastically reduced. The key here is to shift your focus from the immediate tax break to your projected future income and tax bracket in retirement. Don't let a short-term gain overshadow a long-term loss. Now, even if you understand that, your RRSP could still be bleeding money, but not from taxes. This brings us to the next silent wealth killer, your RRSP's growth. It's not enough to just contribute. Your RRSP needs to grow. A common reason many RRSPs aren't growing as they should is a combination of poor investment choices, sky-high fees, or simply holding too much cash. This wastes the incredible power of tax-deferred compounding. Think about it. A difference of just 1% in annual returns over 25 years on a $100,000 portfolio could mean over $25,000 in lost growth. Are your funds just sitting in a low-interest savings account within your RRSP instead of diversified investments aligned with your risk tolerance? Or worse, are you accidentally over-contributing and incurring penalties? Or under-contributing and missing out on valuable tax deductions? Review your RRSP investments. Are they working hard enough for you? Because if they're not, you're not just losing potential growth, you're setting yourself up for the next costly mistake, especially if you're confused about where your money should even be. And that brings us to the confusion between an RRSP and a TFSA. Many Canadians choose between these two powerful accounts without truly understanding their unique benefits. The costly mistake is defaulting to an RRSP when a TFSA might be far more beneficial for you, or vice versa, depending entirely on your current income, your future income projections, and your overall financial goals. This misstep can lead to losing out on tax-free growth or optimal tax deductions. Consider this. If you're in a lower income bracket now but anticipate a higher income in retirement, a TFSA might be the smarter choice because withdrawals are completely tax-free. However, if your income is high today and will likely be lower in retirement, an RRSP often makes more sense for the immediate tax deduction. Misjudging this can literally cost you tens of thousands in future taxes or lost tax-free growth over your lifetime. But even if you pick the right account, there's another massive blunder waiting for you once you actually start pulling money out. This is where many hard-earned savings simply evaporate, the retirement withdrawal tax trap. Just as crucial as contributing is how you withdraw from your RRSP. The biggest blunder here is making large lump sum withdrawals or not strategically managing your withdrawals in retirement, leading to unnecessarily high tax bills. For instance, withdrawing a large sum from your RRSP to cover a major purchase in retirement, like a new car, could easily push you into a significantly higher tax bracket for that year, subjecting that money to 30, 40, or even 50% tax, instead of spreading it out to keep you in a lower bracket. Another common error is under-withdrawing, leaving too much in the RRSP until it's forcibly converted into a registered retirement income fund, or RRIF, at age 71. This mandatory conversion and subsequent minimum withdrawals can trigger large, unavoidable tax events. Don't let strategic saving be undone by poor withdrawal planning. And speaking of poor planning, there's a sneaky way your RRSP can hit you where it hurts most: your government benefits. This little-known but highly impactful mistake often catches Canadians by surprise: how your RRSP withdrawals can directly affect your Old Age Security, OAS, and Canada Pension Plan, CPP benefits. High RRSP withdrawals in retirement can inadvertently push your net income above certain thresholds, leading to the dreaded OAS clawback and impacting other income-tested benefits. This essentially means you're being taxed on your government benefits, a double hit. For example, if your net income in retirement, which includes your RRSP withdrawals, exceeds the OAS clawback threshold, which for 2024 is approximately $90,997, a portion or even all of your OAS benefit could be clawed back. This means your smart RRSP planning could unintentionally cost you thousands in government benefits that many Canadians heavily rely on. Failing to factor this interaction into your withdrawal strategy is a critical oversight. But what if you could put all these pieces together into one ultimate strategy? That brings us to the ultimate RRSP strategy: retire richer, tax smart. This approach synthesizes everything we've covered into one powerful framework. It's not just about how much you contribute, it's about understanding the entire tax life cycle of your RRSP. This involves making strategic contributions based on your income trajectory, making smart investment choices that maximize growth while minimizing fees, carefully weighing your TFSA and RRSP contributions based on your unique situation, and executing precise withdrawal planning that actively factors in potential government benefit clawbacks. This holistic, integrated approach ensures maximum tax efficiency and wealth preservation throughout your lifetime. This might mean contributing heavily to your RRSP during your highest earning years, letting it grow tax-deferred, then strategically using your TFSA for liquidity, and finally, making calculated, smaller RRSP withdrawals in retirement to avoid high tax brackets and preserve your OAS. This integrated approach ensures every dollar works as hard as possible for you. Every day you delay addressing these hidden RRSP mistakes is a day you could be losing out on significant retirement savings. The power of compounding works both ways. It can either build your wealth exponentially or compound your losses if you're not careful. Financial freedom in retirement isn't just about how much you earn. It's about how wisely you manage and protect what you've earned. Take action now before these hidden costs become insurmountable. Remember, this information is for educational purposes only and not financial advice. Please consult with a qualified financial professional to discuss your specific situation. Ready to truly take control of your retirement? If these insights into RRSP strategies were helpful, hit that like button to let us know. Subscribe to our channel for more essential Canadian financial wisdom, and in the comments below, tell us which RRSP mistake will you fix first. Your journey to a financially secure and prosperous retirement starts now, with understanding and correcting these critical mistakes. You now have the knowledge to transform your RRSP from a potential tax trap into one of the most powerful vehicles for building lasting wealth. Take action today, apply these strategies, and build the retirement you truly deserve. Thanks for watching, and I'll see you in the next video.